Whoa!
CPI in the four handle. Check. Rally. A little intraday volatility. Not good. Come on, regional banks. Do you have to interrupt a nice rally when we're at the highs of the pre-market session? Everyone's unsubscribing from the House of Mouse. And Google's PR department finally got the memo. Just mention AI. Marc Chaikin, 8:15. This is pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Let's get the day started. We're in the red by 4 1/4 handles at 41, 47.75. The buck catching a little bit here, still in the trading range, but it's up 28.6 cents, 101 triple fives. Bonds up again, finding support, finding daily support at the 130 area once again. We are up 20, 30 seconds at 131 and 10 30 seconds. Crude quiet, down 39 cents, 72.17. Gold hanging out in the 2,000 handle again, up 660 at 2,043 and 70 cents. Silver going opposite direction in a big way. That's down 47 cents and 25.19. Bitcoin just kind of hanging out here in the 27K handle, small range, down 315, 27,460. Triple D, what a I don't know what the word to describe yesterday was. It was an up day.
Chop.
It was a little too much too fast. They took it down and they bring it back, and now we're going back down again.
Same thing every day. Chop,
yeah.
chop, chop.
That was really a chop fest. Like you could have, if you got opinionated yesterday and you were going all in one way or another, you got destroyed.
Yeah, well, that's just it. And that's what you've been getting destroyed here for 18 months, just chasing moves. You can't chase. You got to wait for the pullback. I did buy some stocks yesterday on the pullback here. Got some nice prices, actually. I went long the Amazon that I had sold before the report, got it back. Both the same price. Wish I would have bought it, 3-4 days ago, but did get in the Amazon. I got in that one at the opening tick. I actually, never happens, Joel. I got this at the very low, 108.05. So, which I never buy at the low. I don't even know when that's happened last. I also bought, I'm just looking at my list. I bought Airbnb, which I talked about. Also bought that on the opening tick.
A lot. Yep.
Yeah, I said I was probably going to do it, and I did. So I bought that at 110. I bought some more IWM, a little bit more. I'd sold it because I was worried about the regional banks, and I rebought it. So I don't know. I still have the position there. But, so that's what I've done so far here, just adding a little bit of risk to the portfolio. Most of those were doing pretty good yesterday up till Pac West here this morning.
Yeah.
Just poo-pooing on my IWM trade.
All right, we got a guest at 8:15.
That's the segue we were looking for.
Yeah,
let's do it. Let's get into it.
Let's go, Mitchy Mitch.
Just like that, the bank concerns are back.
Yeah.
Just like that, team. Pac West in the filing is here stating that they have $15 billion in immediate available liquidity. Also stating that deposit outflows resumed in the first week of May, stating that its deposits declined 9.5% during that week of May 5th. So there you guys see it. Bank concerns back. The only thing that could turn me back to the bear camp.
Well, and I tweeted it yesterday. This is the hole in the bull thesis is the regional banks. Can we afford to lose Pac West? Yes. Can we afford to use WAL if that was to happen? Yeah, we'd be okay. We don't need a dozen of these things failing, though. So as one more, then you think, oh, is contagion going to happen here again? It does look like the writing on the wall that Pac West, has, is a possibility that the FDIC could step in here. It's a possibility. We don't know anything. Nobody has a crystal ball. Down 25% here today, though. This is why the market has sold off. This is why We are under pressure here this morning. The banks are seriously under pressure here. So don't look any further than the KRE. I'd made a case before that I wanted the KRE above 45 before I'd start getting bullish, but holy mackerel. I mean, we're down at 36 here now. So, I mean, we're not even close to that. But again, we've seen the tale of two markets here, to Kenny Glick's point, JC Perret's point. NASDAQ's been in a bull market. So you can see which kind of stocks I was buying yesterday, besides the IWM, which is obviously, wasn't good, but Amazon, Airbnb, looking to get a little bit of that tech exposure here back because these are the stocks that are working. I bought AMD. We know that as well. So bring it back to Pac West here, though. Joel, technicals on this, do they matter? There's good support at 0.
Well, there's a couple.
I'm not even
things.
sure I would buy it for a penny.
You know what?
Well, I would buy it for a penny if I could flip it out at 455. But
yeah. The thing of the matter with this Pac West is I just don't like what's coming out of the company. I mean, right? We had concerns. I believe it was on one day last week. We're looking for strategic options, right?
Yeah,
And they crush it. And then 2 days later, they're like, "We're okay." Okay. And now it's like whoever's running that bank doesn't know what the heck is going on. And so when I see, kind of flip flopping in the management like that, then I have absolutely no confidence in what's going on there. So
yeah, but Joel, this isn't management here. I'm going to interrupt you here because this isn't, they can say they're looking for alternatives. I don't know if anybody came out there and just said flat out, we're okay here. Deposits going down a bit. What are they supposed to say? They can't come in. The management can't come in and say, well, everybody's taking the money out of their accounts here and, we're not good. They have no choice but to stay positive. Bank runs are all about confidence. It's the management's job to bring confidence in any way they possibly can. So management, I'm not going to blame for, the pop from the last 3 days and now it's starting to sell off. They have no choice. They have to stay confident here. I hope it doesn't fail.
I know, but I would have to side with Joel on this one. The comment was fundamentally sound.
Well,
is this fundamentally sound? I wouldn't say so.
It's not at the time, though. You lose 10% of your deposits, you're probably okay still. I mean, what are you supposed to say? I just put myself in the management's position. Mm-hmm. I don't know what they're supposed to say. Like, they can't go out and say, yeah, everybody's taking their money out. So I think as management, you've got to try to stay positive here as much as you can. I mean, it sucks to be a bank and, you're running a good company and everybody takes their money out all at once and then you go under. I mean, this is always the risk with every single bank. This is not the risk with just one bank. It's the risk with every single bank. They are all prone to bank runs because they lend long and they borrow short. All the short-term people take their money out. They got liquidity problems. So, I mean, this is always a problem. Banks are built on confidence. When the confidence leaves, then you got problems here. It's a serious issue that still is weighing on this market here, but we know the S&P has been ignoring it for a long time. The Q is completely ignoring it and maybe thriving on it to a certain extent because everybody hiding out in the Microsofts and the Apples and the Amazons and the Googles of the world, and the NVIDIAs obviously as well. So it still is, why I still have a considerable amount of cash, even though I brought some of it down yesterday. It's an unknown risk, but I can't blame the management here on PACW.
Okay. Well, I mean, we could debate that all we want. I would just say two things. Technically, we're coming down to 417. Didn't quite get there yet. That was your May 5th low. There's a small gap from 415 to 417. So we were faders the other day when it got up near 8. If I had been a fader, now it's coming back down to this area and bad news, I would think I would use this bad news to try and bring it in for 4.25, just being a contrarian. Secondarily, and I'm going to put the link in the chat. I had an interview yesterday on PreMarket Prep Plus with David Cheverini over at Wedbush. Mm-hmm. And he actually, I have never heard anyone talk more informed on the regional banks than this gentleman. No one on CNBC, no one in any of the publications I read. And he downgraded a whole host of regional banks in June of 2022. And one of those banks was SVB, and it was basically the quality of their loans and what they were bringing in. And he's still very conservative on companies. He covers Pac West, WAC. I mean, he covers everything. So I put the link in the chat. So there's a person that does their homework, knows a heck of a lot more than me. So if you guys want a great interview, and I think Benzinga did an article on him too. So great information there. These things are this is what's holding us back. If I had to say, okay, I'm dead wrong, we're taking out the high for the year and everything. If there's anything that's just two things are keeping me back. One is just this resistance up here. I mean, come on. Every time we get up 42, 4180, 4200, and then this other bank thing. If the market's going to be this fragile on one sector, then it's hard to say, man, we're just, unless you're in tech land, right? Like Google.
The market's not fragile at all, though. That's when the frustrating thing for the bears here is the market has not been fragile whatsoever. The IWM has been somewhat fragile, but the Qs and the SPY really don't care. And that's why I've added a little bit of risk here. I mean, I'm not adding a ton of risk, and I still stay at least 50% cash because of all these unknowns of the regionals. If the regional banks didn't exist, let's just say hypothetically, if this regional bank problem didn't exist, I'd be all in on this market right now because we're at 4.9% inflation. We're still significantly off the highs. I mean, there's a lot of reasons to be long here, but this regional bank issue is an issue. But it doesn't appear to be an issue for the Apples and the Microsofts of the world, And I had sold my Amazon originally. I had the Amazon in the long-term portfolio. I sold it up there at 3,200, and I don't know what that works out to on the pre-split.
Yeah, what was the split?
But it's probably like 160 or 165. So I rebought that yesterday. I'm back in the Amazon. So, I've scalped myself 50 points, on the long term. So AMD, we know I've been bullish that. I mean, on pullbacks here. The one thing about AMD is it's just too fast. Hit the 100. I mean, we kissed 100. Major technical resistance. That's right where that old resistance was too. So if you're in it for a trade, you're probably ringing the register here just because it's been a big move. But, I stuck it in the longer term portfolio, believing in the long term story here and just trying to increase the exposure here just a little bit. So, but take the regional bank crisis away and this S&P is a lot higher than it is now.
All right. Now, yesterday, of course, I was in the middle of the day. I was also looking at Amazon. I wasn't able to get it out the gates. Now, in the middle of the day, we did get a headline that definitely got me thinking that, yeah, it's time to get the motor going here. Google AI, baby. That's all you needed to mention, right? Alphabet's annual developers conference here came in, and they announced a lot of different updates in their AI. I'm going to try to cover it all, but I would definitely suggest you look into all the highlights because it's a lot of things in one. All right. So there was, of course, some smart editing added to Google Maps and Photos. Maps will have new immersive views for their routes that will be including real-time traffic simulation, bike lane details, parking information, things like this. We also got Palm 2 powering Google's AI future. Of course, this is their newest large language model. So definitely focus on this. This includes the Bard chat tool that was released recently. It will be the backbone for the company's AI features, right? We also got workspace innovations that you guys need to look into. I think this is actually pretty interesting because let's just be honest, at least for me, I have been using more of like Google's products for office, like let's say Google Docs, Google Sheets, things like this. I use it more often now because I'll be honest, I don't have Microsoft Word license anymore because I could feel like I can use Google's products. So something that I'll be watching there for their AI.
Much for the licensing of this.
Yeah,
they want to charge you every year.
For what?
It's just gotten to a ridiculous level here, Yeah, exactly. There's other products out there. Like, I guess you can buy, I don't know if you can buy it permanently or not, but they want to like bill you every year on the thing. Oh, subscribe. It's $125 a year. To use your Office, to use your Excel. I mean, there's other stuff to your point, Mitch. There's other
No.
stuff out there, that just pisses me off more than anything. Like, it's not
And
even
if they're
about the
going to bring
$100. It's just
AI
about,
features to those free things, oh, come on. Yeah, we'll go right over, right? So I think this is definitely going to help out Google. For a while there, we were starting to think about like Microsoft as being, it was really taking off as kind of mostly the leader with ChatGPT. Now you're really starting to see the interest go back to Google. It took off. I took my shot yesterday near the high of the day. I got 110.89 for the swing trade. Probably looking to take the money and run today, especially with the bank concerns.
All right, let's get Mark in here because we got PPI coming up at 8:35. It's Mr. Chaikin.
All right, let's go ahead. Let's get to it. Mark, what's going on? How we doing?
We're doing well. Hey, guys.
Mark.
I'm interested in all the stocks you've been talking about. So
yeah, we like that.
Love it. Mark,
Yeah.
Do you use Microsoft or do you use Google like apps, like their Google Docs, Google Sheets? What do you use?
We use both. I'm a creature of habit, so Word and Excel are just part of my DNA. But
Yeah,
corporate-wise, we use Google Docs, and
it's just easier.
But the one tool that exceeds everything is Slack, and of course that's Salesforce. Slack, I think, is the best productivity tool I've ever used, and it's firm-wide. But I wish it was a public company. But let's go back to AMD.
Yeah.
Because I think AMD is a real poster child for what you have to do to make money in this market. We've had a bullish rating on AMD, started out around $90, maybe even lower 3 months ago, ran up to 100 on the AI hype. And then after the earnings report, pulled back to 81. And look where it was yesterday. You were just looking at it. You've got to find stocks like AMD that you like and buy the pullbacks instead of putting labels on the market. And that's what I've been saying consistently here since January.
Stock pickers market here. Mark.
Very much so. And even in that market, a stock like Airbnb, which we have a bullish rating on, they exceeded the numbers, but the guidance didn't. The algorithms, the chat GPTs didn't like the guidance. Believe it or not, people are starting to look at this stuff. Now, be mindful, chat GPT doesn't have data subsequent to 2021. So it's being adapted by some charting programs and analytics programs to somehow take in real-time data. But, the algos are programmed to parse these guidance calls. And that's what you see in a stock like Airbnb, which was down almost, 18% on a pretty good report. So the question is, what do you do now? And I don't know what PPI is going to do, but I still see a breakout above 4,200 on the S&P coming.
It doesn't look like, and again, we were saying this yesterday, and we've been saying it, we got the tail of two markets here. We got the NASDAQ in a full-on bull market, and we got the IWM in a full-on bear market. You don't see that very often here, but that's kind of what the story is. I mean, to your point, that's what I've been doing too. I bought Amazon, AMD, and Airbnb here over the course of the last week in my long-term portfolio. The reason is because these have been the stronger stocks, so why buck that trend? I'm going with the strength, and there's reasons for that because the reasons PACW holding down the rest of the market, while it seems to not be holding down tech at all. So I guess you just got to go with the flow.
I think so. And in terms of the IWM, there have been so many articles about how 40% of the stocks in the index don't make any money, but it's even more pertinent right now that there are so many small cap banks and energy stocks in there. And, so the question that Joel would raise is, well, how can you have a bull market without financials and energy? And the answer is they just don't represent that big a percentage of the market cap. So unless we're going to go to hell in a handbasket in terms of the banking system and some, major calamity, you've got to go with the flow and find the groups that are going to outperform, and they're self-selecting themselves. It really is unbelievable. So I'll give you a couple that I think are buyable right now. Airbnb, PVH, great chart. Looks like AMD doesn't have the hype that an AMD has. This is Calvin Klein and a lot of other apparel companies. I think it's Tommy Hilfiger as well. And it's had this really nice pullback. Are we looking at the same stock? Yeah, we are. It's had this nice pullback on the daily chart. The gap is still there from the earnings report.
Yeah.
You can buy stocks like this in here. I think there's some real opportunities.
I mean, the big thing with PVH is one thing to consider too. It doesn't, we're not talking about like the physical stores where, like we know Kohl's and Macy's and Nordstrom's, they sell stuff PVH makes in there, but they're running department stores. PVH is a big difference. They're the stuff going in there, selling to these stores. They can sell online. They can do a lot of different things here.
Yep.
So, this may be a better way to play retail.
I think it is. And, stores have always been problematic. I go back to a stock that was huge in the 60s and 70s when I first came into the business. The Villager, a guy named Max Rabb in Philadelphia who became a filmmaker, he was going great guns with these preppy clothing. And then what did he do? He started opening boutiques and department stores, and they went bankrupt. So better to produce the goods, especially in an economy where, bricks and mortar are questionable, than have those stores sitting there in malls.
All right, we just had a nice pop there. Just
that was off Yellen's comments.
Yeah,
so
I know. Yeah,
we popped 8 points there. Yellen came out and said that default should be unthinkable.
Yeah.
So, I mean, this is how much, and Mark, I want to get your commentary on this too, because we don't talk to you about this, but this is how much algorithms are just driving price. I mean, this is freaking common sense that Yellen is going to say that. Yet the algos see that. They're like, oh my goodness, Yellen says we can't default. We have to buy them up 10 points here.
I think this is old news, though, because I have it at 3:13 a.m. already released. But
Yellen, she was up in the middle of the night like that?
No, I doubt that.
I'm saying the article was released already.
Yeah, so
at 3:13,
the reality is the U.S. government can't default. We just print more money. So
we just print
they're not gonna default on it.
In fact,
go Burr, man.
Yeah, so this is just a game that they're playing politically. Yeah. It's a football. It's not going to happen. The only smart thing I think that our former president said last night on CNN is, we don't know what had happened if we default. Could be one day of pain, could be a week of pain. Nobody knows. But the reality is we're not going to default. We'll just keep printing money and pay our bills. So
the congressmen want to get paid, the government wants to get paid. But just the point that I was trying to make, with the pop and the drop and everything, and Mark, I wanted to get your opinion on this too. I mean, yesterday, overall, when you look at the net results, it was a good day in the market, right? You had the good CPI data, you got a little overdone. I mean, you did have a 60 handle intraday decline. I didn't really see, I mean, I was looking for headlines, nothing seemed to, really attributed to it. But like, to me, what I like, to get in, the bullish camp and build a base up here, I kind of like to see a little bit more. I mean, yeah, it was a buy the dip opportunity, but with as high as the market was earlier in the day, you could have been buying that dip and got absolutely ran over. Does it, is that just the market mechanics? Is that just the news? Is that just something as a trader investor you have to put up with? Or I don't know. It just seems like it was a rally, a little bit of a skittish rally. For me, I'd like to see us bust through 4,200 and then prove that support. Right?
Wouldn't we all? Support is at 40.50. Obviously, we have two weekly lows there. Yep. But you're really talking about day traders. It's tough to day trade in this market. I don't day trade. I have an automated trading program on TradeStation for the E-minis. It made so much money yesterday because it happened to kick in on the mean reversion algorithms. It has some trending algorithms. It's a really tough market to day trade. Okay. And particularly there's no liquidity out there except for single day options. But I don't know what the volume was yesterday, but the volume on Monday and Tuesday in the SPY is the lowest of the year.
All right, I'm gonna jump in here, Mark. I know that you've been watching for a while now. Unity, you've liked it, not liked it. What are we thinking now after these recent report that just came out?
Well, I think Unity is a long-term play on virtual reality and AI, and it's being used in industrial applications for building factories and office buildings. I think long-term, it's a really fine investment, but it's very speculative, and it would be just a small percentage of my portfolio. More importantly, Roblox just had an awful quarter, and in theory, these two are in the same space. They're not tied at the hip. But if I had to choose between Roblox and Unity, it would be Unity.
I think so too. I would take Unity over Roblox as well. I mean, Unity is going to be in so many more things. Roblox is just their platform. So I don't even think you can compare the two.
No, but Wall Street's pretty unsophisticated sometimes when it comes to that.
You think?
Yeah, no. But I mean, if you want to gauge the health of this market and talk economy, which I don't, because I don't know. I think we're in a recession, but what do I know? And I think by the end of this cycle, they're going to redefine what a recession is, by the way, and it's not going to mean anything. But look at Royal Caribbean. We had a buy signal on that at 62, April 13th.
Yep.
We actually recommended an options trade. If you're telling me that the economy is in a recession, how in the world is a cruise line making new highs?
Well, I can tell
this
you, Mark.
is it. we're not in a recession. We haven't been in a recession here yet. The question is the second half we'd go into a recession. That's what people fear. But I was arguing before you got on. I mean, if you take away this regional banking crisis, if it didn't exist, this market's a lot higher here.
Oh my God, yes. But by the way, and there's a great article, an old client of mine, Harold Bradley, who headed up the trading desk at American Century in Kansas City Mutual Funds, posted an article, and he's blaming, or at least explaining, the crisis on the fact that the KRE, for instance, 10 largest positions, they have like 3 or 4 times the average 50-day volume in these big banks. So there's liquidity in the ETF, and a lot of advisors are using the ETF to get exposure, let's say in the small cap banking space or the regional banking space. But when they get liquidations, they have to go out and sell big names that you would know, their 10 largest holdings. There's no liquidity out there. And so that everybody's blaming the short sellers, as was I, but really it could be people buying puts on the KRE, knowing that advisors and other allocators are going to sell them. So the reason I went off on a tangent is it's a crisis in terms of a few banks that have mismatches between short-term deposits and long-term lending. But at the end of the day, unless you think relationship banking is going away and the big banks are going to get all the money, there's actually going to be some buying opportunities down here.
We've been on the line with Mark. We got the PPI coming on with PPI. Marc Chaikin, Chaikin Analytics, joins the show every 2 weeks on Thursday, 8:15 on the dot, to give us his fundamental and technical view on the markets. Mark, thanks as always. We'll talk to you again
You're
soon.
welcome. I'm going to go get
Thanks,
my
Mark.
breakfast. Thank you, guys.
Enjoy it, Mark. Later. All right, let's get to PPI review here. I'll give you guys the estimated numbers, and then of course we'll get to Joel's chart here. Month over month, the consensus is 0.3. Prior was actually a negative number. It was 0.5 in the negatives there. So we'll see if we get above or below this consensus. Year over year consensus is 2.4. Prior was 2.7. We're also going to get initial jobless claims to come in. Initial jobless claims expected at 245,000. Prior was 242,000. This has been increasing, so I'll keep an eye out on that. And of course, you can look at like core PPI and things like that. I don't know if that matters to you guys, but I'll mention it here. Core PPI year over year is at 3.3. Prior was 3.4. Let's see what we get here. And of course, there's some other numbers. You guys can see it a lot here.
I think it's in line just by the action. I don't know if it's out yet. It's in line to pretty good so far from what I'm seeing. You do have a bid above the close from yesterday. That's actually a double close area. You're climbing here. There are sellers out here. You're you're above mid-range on the session now. So I think it looks like an inline number. I'm just kind of going here off the price action. Certainly not moving like the CPI, jobless
No.
claims coming out too. Dennis is going to say it's a nothing muffin. What are we seeing out there? Is it actually out yet?
Jobless
Got you right
claims
here.
higher.
I got you right
Claims
here.
higher.
Core
Go.
PPI month over month, April 0.2 versus 0.2 expected. Month over month at 0.2 versus 0.3 estimate. So a little bit under that. Initial jobless claims, 264,000 versus 245,000. Prior was 242. So initial jobless claims jumping a pretty good amount there. Year over year outlook for PPI at 2.3 versus 2.4 estimate there. So we definitely saw a little bit of a jump there in the initial jobless claims. I'm looking for the continuous jobless claims because that one showed a little bit of a mixed signal last week. So I'll keep an eye out on that. But core PPI at 3.2 versus 3.3. So pretty much the PPI numbers seem like they're coming in just about a 0.1 off each of them, right? You got PPI month over month at 0.2, PPI year over year at 2.3. And they're all off like about a 0.1, but to the downside. So not looking too bad there. A little bit of slow up, not much reaction off this. Are we seeing anything?
No, we jumped a little bit on it. I think the numbers, it's light, so it goes with the CPI to a certain extent. I think the jobless claim spooks the market a little bit here. Like they want jobless claims higher, so the Fed's done, but at the same time, they don't want to start seeing that because like, oh, maybe, we're going to go into a recession. I mean, it's like you can't have your cake and eat it too here. If you want the Fed to stop, eventually everything's got to slow down a bit. So, but, the market does want its cake and eat it too. So it just wants inflation to go away altogether and the economy to stay strong in the soft landing. So it's a little bit of a mixed message here. But again, this isn't like getting a CPI report.
No, not at all. And you felt the rally, right? You had the rally off the Yellen comments where they were new or old or whatever. I did see a comment coming out of good old Jamie Dimon, and that came out, I believe that came out right around 8:20. And he totally goes, at 8:21, Jamie Dimon says debt ceiling is potentially catastrophic, but regional banks are strong. So, on Bloomberg TV. So, man, I don't know what to make of that.
The market is trading off of like commentary from people. It's so hard to follow it everywhere. I mean, we're so headline driven. You get some Yellen comments, you get some Diamond comments, and it moves the entire market. I mean, the market is just so jittery, and the algos, it's just so much algorithmic action. I mean, we talked about it off the earnings reports, and you're trying to make heads or tails of it. It's a matter of just the algos just pumping or dumping. I mean, this is what moves markets. It's so algorithmic driven here now. It's like nothing else matters. It's just pushing around on headlines. And that's why if you ignore headlines in this market, I think you're missing so much, so much opportunity there. Like people just say, oh, just look at charts. You set up, it looks like a good setup. That's above the 200-day moving average. Let's buy that. Oh, that's below the 200-day moving average. Let's sell that. I think there's so much more to this market. I mean, certain markets trade very technical and certain markets are headline driven. We are in a headline driven market. Every economic data point matters. Think about 3-4 years ago, Joe, or even 2 years ago. The economic data points didn't move the market. The only one that ever moved the market we were complaining was the jobs number. So, I mean, we are in a headline market and you have to understand and trade the market you're in. And right now, if you're ignoring the headlines, you're getting whipsawed.
A perfect example of that. Remember, like during COVID, and they came out with like the unemployment rates and and jobless claims, and they were absolutely abysmal. And the market rallied, right? And then came out with some of those airline earnings, and they were losing $50 a share, and they rallied. I mean, right now it's just a muted market. To me, I like to be on the super bullish rah-rah camp, but I like to move it. I like it to move more on fundamentals. But that's a thing of the past, right? With algorithmic trading, it's just a thing of the past here. And I right now, just the fundamentals. They're great for the cues. They're great for the time here. We're starting to lose altitude here a little bit.
A little bit.
Yeah. Now I don't know. I don't think that number was good enough here. kind of still at the top of the trading range. I'm not backing off my high for the year end yet, but
Yeah,
we shall see.
Of course, when PPI goes up, it's going to give the perspective that it could see that inflation going up higher. Of course, the cost
It
of
was up.
production going
PPI
up
was up. I thought it
compared to prior, right? We were in negative, so we went to a positive. So if you viewed it like that, that's how you could view it as a negative, right?
I think the jobless claims matters
but
more here.
I think so
today.
too. I think so too, and that's
that
actually a
going
good
up,
sign.
Originally, they probably buy it on the good PPI, but then they're like, oh, yeah, the jobless claims, that's good too, because the Fed's not going to make them cut faster. And they're like, oh, wait a second. Is it good news? Does that mean we're going to recession? That's why I'm saying jobless claims itself is a mixed message.
Yeah, mixed.
It's a mixed message in itself because people don't want to see us go into a recession, but they want to see the Fed cut. This gives you more weight that, Fed cut could happen in the second half as you see jobless claims going higher, but then they're like, oh, recession. So, I mean, it all depends on what you want to gravitate to. Do you want to gravitate to the silver lining of, jobless claims going higher means the Fed's going to probably pause, and more definitely pause, at the next meeting. But if you're thinking the other, that you want the soft landing, well, this isn't good news for a soft landing. So, mixed messages.
All right, let's get out of some economic data. Let's go back to some of the earnings reports. Let's go to Walt Disney, of course, and let's get to that action. Walt Disney
been talked about yet.
Yeah, Q2 EPS at 93 cents in line. Sales at 21.82 billion, beat the 21.79 billion estimate. Disney's Q2 domestic channels revenues decreased 4%. Disney lost 4 million Disney Plus subscribers in the quarter. A lot of this coming from India, Disney Plus, 8% drop in membership there. Disney Plus paid subscribers were down 2% year over year. ESPN Plus paid subscribers up 2%, and Hulu paid subs were flat. Disney's streaming losses came down during the fiscal second quarter as price increases offset the loss of subscribers at Disney Plus. They also announced a raise in the price of the ad-free streaming service later this year. When we looked into the parks, experiences, and products, that actually did well, 17% increase in revenue. Now, one thing, of course, that's not helping it right now, they got the writers' strike. That's not going to help the content side. Production shutdowns in Marvel Studios for the Blade hit, and also shutdowns for Disney's Plus Star Wars series Andor. So this is one thing that I've definitely pointed to. I've talked about how they cut content spending, and now that there's a writer's strike, I definitely don't think this is going to help the content. And I think that that's where they're struggling the most is in content. Disney CFO did predict continued softness in Disney's Plus subscribers may linger into Q3.
Lots to chew on here. I don't have a position in Disney. I
bought it. You were long it, yeah.
So what I did about a month ago, not even a few weeks ago, I bought Disney. It says forming that base, and then the Pac W stuff and all the regional started to collapse. I was like, I don't want that exposure. So I scratched the trade out, the longer term investment. I don't want it. And now with Pac W and all this stuff, I didn't want to take it through the reports. So so I don't have a position in it. I do think it's a buy down in the 90s. The one problem here, and Mitch making the fantastic point, it's all the perks. The perks have been the driver. So the Disney Plus is not going well. I don't even turn Disney Plus on anymore. So I may even unsubscribe from it. So I do like the Star Wars content. I'm a Star Wars fan. But if you're not a Star Wars fan, they just don't have new stuff. And it's just not that, there's just not enough content. There's not enough of it. So I think the Disney Plus product is very disappointing at this point in time. So now you look, okay, well, you're leaning on the parks. If you're going into a little rougher time here again, the parks revenue could end up coming down on you. That would be a worst case scenario. So you get Disney Plus not doing well. And if you go into a recession in the second half, maybe that parks revenue, which is at peak earnings right now, it's as good as it gets right now. So then you start adding all that up and you see it 22 times and you're like, I don't know. Do I like Disney as a franchise? Love it. Do I think there's a value there at $90? I think long-term value. But right now, parks are firing on all cylinders. The rest of the business, not so much.
We're trading down. We're trading down substantially, $5.42. A little bit off the pre-market low. The pre-market low comes in at 95.10. Just for the short term, just for today, that's not a bad area. You had a pair of, just three lows within that area, 94.38 to 95.35. I'll just ballpark that 94.75. Call that support. If in fact they can't press it down through that area and the pre-market low holds, maybe you could drift back up. Would find resistance near that $100 area now, traded so deep in the red. Yesterday's low will be the gap fill at 1004.
Yeah, one thing that I would note that was in their earnings, they talked about how maybe they're going to go ahead and pull some of the Hulu content into Disney Plus to try to get some more subscribers and content on Disney Plus that could get some viewers over there. I think in the long run, we might see a consolidation between Hulu and Disney Plus, like kind of like Max did, right? With their with Discovery and also HBO Max. I think you could, in the long run, maybe see those two combine because there isn't enough content on
There's
Disney
not enough
Plus.
content.
I have
go on
Hulu.
there.
I have Hulu paid. So I like Hulu. I will tell you that at least, because I can watch like pretty much all the basic cable shows that you would have. But we'll see if they switch that over. All right, Dennis needs a bounce for a little bit. We'll keep it moving. Let's go to the next stock. We talked about it really quickly. Let me just at least cover the numbers here. Unity Software, Q1 sales at 500 million, beat the 480.9 million estimate. They did see Q2 revenues at 510 million to 520 million versus a 508.46 million estimate. They see fiscal year 23 revenue at 2.08 to 2.2 billion versus a 2.13 billion estimate. So good outlook there on their Q2 revenues and fiscal year revenue. The software is now reducing approximately 600 roles, 8% of their workforce, also giving them a little bit of a lift here. So I was able to day trade Unity yesterday towards the close, got a nice little gain on that. I didn't want to hold it through the earnings because I was a little bit worried, but hey, you guys see it. The earnings, not too bad here.
I was hoping we'd have a better pop-up before the earnings report. I was hoping it could get up to that 30 before the report and be a little bit, but it just, the overall market rolled over after 10 o'clock, and that's what really didn't help Unity. And then they obviously came back towards the end of the day. That rollover didn't help. I mean, the report was good. We talked about a potential 5-point pop, and that's funny. That's what it got. It's given some of it back. I do think Unity is the kind of stock they want right now. I think they are this is software that's going to be into a lot of things. Michael Pachter's been on the show, and he's loved the company for a long time. I always believe in Michael Pachter. He makes a lot of good calls, bad calls at Netflix, but lots of other good calls as well. So I think to Mark's point too earlier, Marc Chaikin's point earlier, you're picking like Roblox or Unity, I'd take Unity all day.
It's quiet. It's quiet here. I mean, it wasn't quiet. You had that pop up to 33.68, so that's going to be a nice target. But right now there's just price discovery going on right here between 31 and let's call it 31.75. Top of yesterday's range, if you're looking for support, that's way down at 29.09. As far as looking for resistance on the dailies, throwing out that 33.68. We poked our head above 32 on a couple occasions. So I'd look at this 32. It's above 32. Actually, pair of highs, 32.54, 32.57. That's what I'd be keeping on a pop here based on the current market information.
All right, let's go to Robinhood Markets. Q1
Oh, yeah,
EPS
Dennis.
at a loss of 57 cents, beat the loss of 61 cent estimate. Sales of 441 million, beat the 424.53 million estimate. Robinhood to launch 24-hour trading on weekdays in stocks and ETFs. Under the new 24-hour market, Robinhood will be offering trading from 8 p.m. Eastern Sunday to 8 p.m. Eastern Friday for 43 securities. Some of these stocks.
What are the 43 stocks?
Yeah, I didn't get the whole list. I got like some major names here from our article. I got Amazon, I have Apple, Tesla in those reports. So it's going to be the big boys, right? I think that's what we're not talking penny stocks here. We're talking probably big mega cap names. But what do you think about this, Dennis?
What you
24-hour
have to
trading?
understand is how this is done. This is just a money maker for your off-exchange market makers.
Yep.
Because they'll provide a wide market. So if the S&Ps are here, we'll provide a market for you here. You want to buy it, you're going to pay up here, and we're going to make that spread. The spreads are going to be bigger. They're going to be moving. This is not going to be a moneymaker for any traders trading on Robinhood after hours, unless there's news breaking on Amazon at midnight and you can pick off a high-frequency trader that's not paying attention to it. It's going to be very difficult for retail to make money off this, and this is just another moneymaker for the Citadels and obviously the other major companies or major off-exchange market makers. Well, whoever gets that flow. So go and look, and I'm getting hit on stock, so I'm getting.
I know this is a little bit of a chop fest here. We're trying to get above unchanged, and I just want to, and I don't know if it relates to the stocks that you're trading. Monday's close was 52.75, and we closed yesterday at 52. So I'm going to bring, coming off the pre-market high and coming off the that pop that we had off the PPI. I think it's really important with the choppy price action yesterday. Is to get over that closing price and hold 41.52. As far as this Robinhood and this news, I said to Mitch when we discussed it on the pre-market show, I said I'm upgrading Citadel. I mean, yeah. And didn't TD Ameritrade, was that
they tried to do something like this, right?
Was it futures though? Or was it
I remember
stocks?
it was
TD
way
Ameritrade,
back.
I think, is still doing it a bit, aren't they?
Yeah,
or
I
did
think
they
they
get rid
still
of it?
do it. TD members out there, let us know, team. I try my best not to use it, but
be very careful trading these after hours because you're going to be paying a wider spread. And I'm just telling you, they're not like there's going to be, it's going to be hard for a Robinhood trader to meet with another Robinhood trader. There's always a middleman. This is the problem with trading with retail accounts. Is the middleman. And the middleman's going to make it wide enough that they're making money off you. This is a money maker for Citadel. It's not a money maker for the Robinhood clients.
Would it be different, Dennis? Just I'm wondering. Would it be different if you could actually select the directed route in the after hours there?
I mean, that's
versus
the
smart
downside.
routing.
This is why I stay away from all those. Like I'm at Interactive Brokers. I control my routing at IB. Not on IB Lite if you're paying with free. I pay the professional. I control my routing. So I don't have to route out, but it's still a matter of, who's trading at that time. You're going to have the high frequency traders making a market for you there. And you're, going to try trading Amazon, which is no market for, and all they're going to do is price it off of the S&P. So they can do all the major companies because they can arb them with the S&P future because the S&P futures are open at that time. If the S&P futures weren't open at that time, they wouldn't offer it. But because the futures are open, you do Amazon, Microsoft, we can just hedge it out. So they just hedge it out. Similar to, I do some of that stuff after hours as well. You just hedge away the risk. You can hedge away, obviously, as you get more and more companies, you hedge it better. But for the most part, you can hedge away the risk. And that's
and just for that, I would say, for I don't know how many people we have on the Robinhood platform or trying to do these other things. If you're trying to exit a position, and you have some kind of, you probably could put limit orders out there, right?
But you're getting picked off.
Yeah.
So you're going to get picked off. So what's going to happen is if you're on Amazon and you've got your order out here, once the futures move above that fair value, they're lifting your offer. So you're always going to get picked off on that. You get picked off during the day too. All this stuff happens during the day, except it's going to happen with a lot wider spreads. So it's going to be way worse. Slippage is going to be so much worse at these hours. So again, I'm warning everyone that don't think, oh yeah, this is going to be great, because you don't have enough other participants out there. Yep. You're just trading directly with Citadel. So it's tough to make money. There's a reason that Uncle Kenny, you want to call him Uncle Kenny, has all these properties all over, and he's one of the richest men in the world because he's trading with retail. So he's taking the other side of all retail orders, and the typical retail traders are losing money. There's some good ones there too. Don't kid yourself. There's some good retail traders, but there's a lot more traders who really struggle. He's going to have wider spreads at midnight. He's going to make more money off of you if you're trading.
And also those orders coming in are like, they probably don't even affect their book. It might even be, taking them out of something that they have that they don't even, they don't even have to lay off on, right? They have, overnight positions, hedge positions. If something, if someone wants to come in and buy Bank of America, I mean, something like that could offset their positions. But anyways, Robinhood, let's just go to the chart. You got to pop almost at $10 off the headline news. What was that high there? That high? Oh no, that was probably during the 993. That was probably actually during yep, that was after hours. So $10, that's a major level. You can see the three highs just over 10. And for support for right now, we'll call it the top of yesterday's range, 938. That's pretty close, but I'd like 9 looks like a real congestion area based on the closes.
All right, let's go ahead. Let's get to our TradeZero, and we'll go through some of the other earnings that we still got to get through. All right, let's take a look here underneath in the gappers. And of course, we'll bring up some stocks here. The first one I want to bring up is that bid report. Of course, this is already trading. I put JE. JD, baby. Let's take a look there. I've been watching this one also. I mean, we've seen how Amazon has recently taken off. Shop has taken off. Melly has been doing well. Let's talk about their earnings here. 69 cents beat the 50-cent estimate. Sales of 35.38 billion beat the 34.64 billion estimate. Now, it looks like the CEO is retiring for personal reasons, and the current CFO is promoted now to CEO. So I don't know how that really affects the company, but just wanted to give you guys that information.
Stocks is in such a wicked downtrend. I mean, you could go to 40, 45, and it's still ugly. So not saying that's going to happen whatsoever. I've tried to play this a little bit long a couple of times here. It just keeps making new lows. So hard to get on the bull train here on JD. I'd love to, I think there's some value here. Again, geopolitical risk keeps me out of all Chinese stocks, but I do think there's some value here in JD. And, the earnings were good, but it's just such a wicked downtrend.
Yeah, it's you made that low 33.5, let's call it 36.5, 3-point move, but I think I would try and be more patient. Maybe if you wanted to be long this thing, if you could get it back in the 35 handle. I see actually 5 closes in the 35 handle. So I don't think I would chase it up here, but on a pullback, if you could get it in the 35 handle, maybe lean on the low of the move. As far as taking out resistance, you are doing that as we speak right now. Your 4-day high was 36.23. So as long as you stay above that, you got some room on the upside. This was really the only positives I was seeing when the market was down this morning. The Bobster bouncing off the $80 level. Market has memory as that hit that level back in March. Just hit it recently, back up at 85. Baidu hasn't mentioned AI as of late, but that looks like it's forming a little bit of a base. So
holy, the Baidu has just been going straight down here too. I mean, you can buy China all at the lows. I mean, look and just bring them up here. Yeah. Baba, not far from that 80 low here. I mean, just look at the charts. Baidu's giving back a lot of it. I mean, not the October lows on some of these, but you can buy them at the 2023 lows. It seems like all of them.
All day
What's
long.
PDD? Pinduo Duo. Oh my gosh, Pinduo Duo here.
Oh my! Oh, that was the thing.
These are so ugly.
Oh man! What about now? What about this $50 area? Bottom in November. It's 60. Bottom in November at 60. This is where it all came from. At least I would say the rate of which it's going down is slowing down. I don't know if that's actually a bullish thing, but yeah,
falling knives. That's for sure. See that
2-for-1 stock split almost since late January. So that's an interesting chart there. FXI hasn't been. We haven't heard any no China headlines lately. No, China hasn't gone into Taiwan yet.
So why do they continue to whack them all?
I don't know.
This is there's something else happening here. Yeah, because you've had tech rallying, but China tech not participating in that rally whatsoever and going down. And we aren't hearing anything bad about Taiwan. It just makes me think that something eventually there's going to be some type of headline that drops over there from a geopolitical standpoint, and the market's not going to like it because
definitely don't need that.
And we don't need that, Mitch. But that's what these stocks are
that.
telling us. I mean, these earnings were fine at JD. All the earnings have been pretty good out of the China stocks. They're always pretty good out of China stocks, aren't they, with their accounting rules? But
maybe that's what it is too. I mean,
wow,
no trust from investors, right?
Oh, the JD
no trust.
Shocking.
All right.
Let's go to the Googs. Let's go to the Googs. And we talked about the Googs much?
Yeah. We talked about them, but I wanted to go to AppLovin and some of the smaller ones. Let's knock them out, right? Let's do AppLovin. We talked about Googs there earlier with their AI, but let's get to AppLovin here. Really nice lift off here. EPS at a loss of 1 cent, misses the 7 cent estimate. Sales of 715.4 million, beat the 693.51 million estimate. Yet, really, I thought that was a big miss there on EPS, loss and expecting a positive, yet taken off.
What stock are you on? APP?
APP. AppLovin. Loving apps.
Did they say something about AI?
It is kind of like an AI play here. I mean, this looks like to me like kind of like Upstart. Like it didn't matter. It didn't matter who was in the report.
That's pretty much this earnings season.
It's
been the earnings season. Crocs blows it away. They murder the stock. Other companies that miss and they can't stop buying them. I mean, you could have been an insider on a lot of these companies here. Have the report ahead of time and still got your butt kicked to trade these earnings reports. I don't know. You're right. Like these earnings reports just haven't seemed to matter.
Yeah, it's a random walk. I've heard someone post that on Twitter.
Just a couple times.
For this one, I mean, you got a relentless bid in here right now. Who knows how long it will last, but maybe some sellers will appear at your October high. Your October high was 21.79, and you ended that month at 16.96. So with the upward momentum, up $3.50, being at $16 last week, I got to give it too early. I'll give it a 2.5 star. Watch your bids, Triple D. They're making their mind up here in this market right now in the pre-market. Now we're read by 5 handles. So looks like
chop.
Chop.
That's what's in store for you guys and girls. I tell you right now, I'm not great at predictions, but I will predict chop. So I guess you just keep, just playing the chop, and that's fading everything. That's what continues to make money in 2023, fading everything. But certain stocks, tech stocks drifting higher, and then we have obviously everything else that feel like drifting lower.
Sometimes, Dennis says this market's easy, and I'll be honest, guys. I'll be on the other side sometimes, and I'd be like, no, not easy one bit. But
easy.
This trade might have been an easy one here. Did you get your flowers for your mothers?
Oh, how did we miss?
1-800-flowers.com, baby.
Come on.
Adjusted.
Where was the seasonality trade? Next,
loss of 27 cents. Beat the loss of 36 cents.
Next
May,
sales of 417.5. We're going long FLWS before Mother's Day.
It missed on sales and gave a little bit better EPS at a loss. It still went up, baby. Yeah, the AI flowers.
Flowers coming at you. AI flowers.
And that's FLWS for you guys that don't know the ticker.
They water themselves, the AI flowers, man. The AI flowers water themselves. You don't have to do anything. They grow extra high.
Yeah, man. They'll use a little AI to know which flowers.
Calendar reminder. Right? Get your iPhones out. Do it with me. Calendar reminder. FLWS. Go to next year. When's Mother's Day in 2024?
Or would be the next flower type of day, right?
Is it May 12th? I believe it's May 12th. May 12th, 2024. So calendar reminder around May 8th, May 9th. We need to be long flowers ahead of Mother's Day. FLWS.
Right.
It's a simple game sometimes.
All right, 10:30. You're coming up on your April 25th high. If that was your target, you have it Ooh, you're getting close there. So I would just say, if you're looking for more on the upside, just got to get through this 1030 to 1086, 1082 area. Those were three highs, a little gap fill back at the end of April. That's what you're looking at. And 1-800 flowers. And Dennis, don't you forget to do something for Mother's Day.
I better.
For your mother and for Laura. Make
You
sure
have to do your wife too. Is that how it works? You got to do that too.
you got it.
Aren't my 5-year-old or 6-year-old, she just turned 6-year-old and 8-year-old supposed to take care of that?
Yep. No,
But don't they
I
do
passed
something
the buck on that one now.
Don't
No,
they do
man,
something
you're
in
screwed.
school? Like,
Yeah, they must do some cards or something.
They get they get the easy way. They get guided through. You got to go do the shopping, Dennis. All right, let's go to the last
new
market here.
lows,
shopping.
new
I'm
lows.
very poor at
I'm gonna
shopping.
fade Triple D. I'm gonna say if we can't hold this pre-market low, I think we're gonna get some pretty good downside
I'm
here.
not sure. You're fading me. I'm not sure I made a call. What's my call? Tell me what my call
We
was.
can
Oh,
always
no,
do
it's
it,
not.
Dennis, man.
No,
No, you
I'm just
said-
curious because I don't
No,
know
you
what I'm
said
thinking.
chop. You're
Chop.
right. It
He
is
said
chop.
I actually
It's
don't know
chop.
what I'm thinking here. All I know is so long-term portfolio. I still have my AMD. Kind of think that 100 is a sell, to be honest. But the long-term portfolio lasted 3 days because it got up to
We
technical
got some
resistance.
news, Mitch. Is there something breaking here at 9
Not
o'clock?
buying. I'm not buying Disney till 90. I've decided. I may buy it at 90, but I'm spooked. So people are asking me about Disney. Am I buying the pullback in Disney? I think I might at 90, but I'm not going to buy it. And Airbnb, yes, I did buy yesterday.
Last one I just wanted to mention really quickly. Maxen did report today. They gave really good Q2 revenue
Well, that used to be
outlook.
one of your darlings, wasn't it?
Yeah, Maxen. I
You used
played
to
it
like
multiple
that trade in that
times.
stock. Yeah.
I've traded it multiple times, way below this, right? So that's another thing to keep in mind. I've traded this like in the 15s and 16s, not 30s. So just to kind of mention that, but Maxen Q2 revenue outlook 360 million to 400 million versus a 356.38 million estimate. So their estimate was below their lower guide right now for Q2. So this definitely giving them a lift. We've seen some good mentions from some solar names, but of course, First Solar has been the ugly turnaround there.
This is
Solar.
such a contrarian move to the solar. Everyone must be going to Maxion
It's been
Solar
going on
Tech.
for a while here.
Yeah.
It started with the NPH, and it has just spilled over. SEDG reported, and they took it the other way. I'd be nervous on SEDG at major resistance at 300 with all the other disasters that have happened in solar. First Solar, ENPH, the tan has been getting tanned. Eventually, I do think solar is a big part of our future. You got to look at multiples. You got to look at what you're paying for these companies. That's, the major thing when you're looking at these. But, I mean, SunPower, I was in this for a long time here. I'm so glad I got out of it because I was in this. This was one of my best long-term trades, I think, ever. Because I bought this in 2020, right during the COVID bubble at like $6. And I actually sold it all, Joel, at 52.
I remember that.
I've never taken the entire move like that. I sold it literally like 7 months later from 6 to 52. And I, rarely, I'm always out too early, but I pretty much got the entire move on that SunPower. I rebought it a couple times in there too and made money even doing it a couple times. I've kind of just been really lucky with this one. I think $10 on SunPower. I think it could bounce at that level. It's where it was 17, 18, 2017, 2018, 2019 before we kind of broke out. So I'm kind of eyeing that $10 level, but you're not quite there yet. But it's on my shopping list at $10.
Okay, all right. I'm just going to wrap things up here. We're declining. We just took out the low. We're opening another half hour, but opening near the lows of the session. There's not much in here, folks. I mean, I wish I could give you a good number. My weekly swing number has been 4140. We're right here right now, but if you were trying to swing at that, you would just gotten chopped up a lot. Yesterday's low, that's way down at 4112 and a quarter. I don't see that coming into play. Back on the upside, if the bulls want to say, hey, we're going to 4,200. They're going to make a charge at that double close area right at 41.52. So I'm going to hop out of there. Everyone, have a great day. I just want to throw in there the closing print today. Gene Munster will be joining me.
Nice.
To recap this earnings season. So come often, come with your questions. I'll be ready to go at 3:30 tomorrow. So thanks for joining us today, and we'll see y'all at 3:30.
Wicked
All
rotation here today. Remember, you can say, oh, the market is collapsing. Well, look at the Qs. We have the tale of two markets here. Once again, IWM getting the beats, the Qs getting bought. Again, Google up another $3.
Googs, baby.
Because everybody's decided all of a sudden, oh, Google's going to be in AI? Oh, that's a shocker.
No, Dennis, I think it was all about Google AI into search. Because for a second there, what did we start thinking of? Could
I had the
Bing
Bing
actually become something? No.
Yeah.
That's what that
No, it's
yesterday
not.
told me. Yeah, that, like just push that to the side. No one's
Push that
using
to the
Bing.
side.
No
well,
one's
I had
using
the little
Bing.
Bing. So I told you the story. The Skype, I got the Skype open, and the little Bing popped up at me. Let me just go see. I'll bring up my Skype here again because I actually want to read what it wrote to me. So I said, it said Bing. So here was our interaction. Bing. It pops out of me out of the blue. Hey, this is Bing. I'm here to help you. Ask me any type of question like finding recipes with what's in your fridge, vegan restaurants in Cambridge, or drafting a story for curious kids. In groups, remember to mention me with Bing. I'm an AI preview, so I'm still learning. Sometimes I might say something weird. Don't get mad at me. I'm just trying to get better. If you want to start over, type new topic. And if you want to give me feedback, just report a concern. How can I help you today? I'm in the middle of a tray, and this pops up at me. I said, never talk to me again. I responded. It said, I'm sorry, I can't reply to you. And whatever, I don't know. That's it.
No, I can't even
And it's
respond.
never said anything. It's just sitting there in the corner. I said, never talk to me again. I'm in the middle of a trade, and you're talking about children's recipes. Vegan restaurants.
Man.
Buddy, I am not a vegan. You know, you want to talk to me about some good steakhouse? Maybe you got my attention. Like,
Right.
learn a little bit more
Filet
about
mignon?
me before reaching out. That's what I thought of the Bing Skype thing. Stay away.
I agree with you, and
Hold
I think
it,
that
don't
this
ever
is
talk to me again.
this is why the truth is I don't need AI in everything. I need AI when I need it, right?
Yeah.
When I want to go to it,
Don't
not
shove
you
it down
tell
my
me.
throat.
Yeah, don't shove it down my freaking throat, man. Everything
With
I get
vegan,
now.
with vegan recipes.
Yeah, and then I've been doing like more and more search, and I feel like search is actually getting crappier with AI, not better.
Probably.
Like I do search, and then all of a sudden I get all these like different articles that I could care less about. They're like on like these weird PRs that like, you know, like these fake websites. I just want quality resource that can tell me what's factual or not. That's all I care about for AI. Give me what's factual, right? Give me a percentage. Hey, we feel that this is about 90% accurate. That would be way better for me than you trying to just give the answers. And then, of course, we find out that they're probably not the answers, right? So we've seen it fail multiple times. But Google started now. Google really getting going. Can Google just save us today?
Amazon. So I'm looking at what's green on my screen. Google, Amazon, ARC. Upstart's holding green. Micron is up here. NVIDIA is up. AMD is up again. I mean, it's very clear what they're buying here today. So, again,
NVIDIA
we're
came
seeing
back
what's
yesterday.
weak. The same thing that's weak every day. The bloody banks. It's always the banks. The banks are bloody here once again. They continue to be the problem. PACW is the problem. WAL is the problem. Maybe not today, but probably tomorrow. I mean, this is just the market we're in where the regional banks are holding us back.
And they gave me a shakeout yesterday, Dennis. I got out of that FAZ and I'm kicking myself, man, because look at that move. Yesterday, right at the bottom, right at 930, just goes up right out the gates. But it went through my break even. So I kind of got out of that one. And now I got the shake. They shook me out yesterday.
This is what they do in this market. This is the shaky market. They do this. This is how they do it.
So now I'm looking at like Bank of America. Do we go through yesterday's low, right? Yesterday's low around 27. We're at 27.11 already. So we got a little bounce overnight, but right back down. Looking at the bigger banks too, because yeah, smaller banks going down is a concern. But to me, the real concern is these bigger banks start to come down, right? If those start coming down, JPM goes right back to where it was. Remember, it was down here, right? Down towards like, 125. If it comes back down to that 125, I think you're going to start.
That chart doesn't
more
look good on JP Morgan. I don't like that chart at all.
A lot of resistance.
Yeah, a lot of resistance. And if you take out that 135 candle from yesterday, which we're going to lean on here today, kind of looks to me like it wants to roll back over to those lows, Mitch.
Yeah.
So good eye.
There's a nice gap right there, too, to fill, right? I mean, everyone can see it. Through that 134, 135, we could fill that gap.
So I got some calls. I got a hot.
Go for it, Dennis. Do your thing. All right, guys, we'll bring you guys over to live trading. That's coming up next. Don't go anywhere. We got a lot more for you right here on Benzinga, of course. You guys know I'm swinging Google. Made a really nice overnight call. I mean, I'm up 3.82% on this position. Not bad at all. Not going to complain. I also took a cruise line. Find out what cruise line I took if you come over to live trading right now. Hit the like, team. We'll see you guys over there. Let's go. See what I can get into today.